Holy smokes everyone, boy are things getting crazy in the markets. And I'm starting to see a big shift in investor sentiment. Normally what would happen after a big sell-off that we had the other day of the Nasdaq falling over 3%, we would immediately rebound the next day by at least 1 or 2% because you had to buy the dip, baby.
Here we go, come on, push it, buy the dip, buy the dip.
But unfortunately, it's looking like this dip may keep dipping, or this dip may turn into a rip. Now in this video, I've got some huge news and some huge data for you to show you this is not clickbait, that there is a massive meltdown going on right now and 40% of stocks have crashed 50% or more. I'm also going to go over what the global elites, the 1%, the hedge fund billionaires are doing in the markets right now because we have some new alarming information. So everyone, this is going to be a good one. Let's not waste any time. Let's get straight into it. Look at this everyone, massive meltdown. 40% of Nasdaq companies are down more than half from their highs. In a testament to the narrow breadth of the Nasdaq, the broader market in general, where as a reminder, 51% of all market gains from April through to December were from just 5 of the most popular tech names. That is Apple, Microsoft, Nvidia, Tesla and Google. This is what I've been talking about everyone. We're seeing a crash in the market, but it's only the few mega corporations, the tech stocks, they are the last defense that are keeping these indexes up. And like I did a video previously, not just in the Nasdaq, but also in the S&P 500, over 300 companies are already in a bear market with a 20% decline or more. Sundial Research notes that a near record number of tech stocks have plunged by some 50%, a number that was only surpassed by the March 2021 crash and the global financial crisis. Now this is crazy everyone, and what we're really heading to is a few mega companies that control everything. Monopoly over many different industries. Whatever the fundamental and macro considerations, there is no doubt that investors have been selling first and trying to figure out the best result later. So what this simply means is the stock market is already crashing. We already are seeing a big crash, but the FANG stocks or the top 10 companies in the S&P 500 are the last defense. But once they fall, that's when we'll start to see the indexes really plummet. But it's not only this what's happening everyone. Let's have a look to see what the insiders, the hedge funds, just did. Look at this everyone. Hedge funds are selling tech shares at their fastest pace in a decade as rates spike. So you're starting to get the message here people. This sell-off isn't over and it's only going to get worse once the Federal Reserve starts lifting interest rates. Now the reason why I think it'll get worse is because a lot of people think the Federal Reserve is actually bluffing, and what they think they're doing is something called forward guidance, where the Federal Reserve tells the market what it's going to do so that way they don't actually have to do it. So what the Federal Reserve may be thinking is saying, okay, look, we know inflation's out of control, so we'll lift interest rates. Now, by saying that, people may think, oh, they're going to lift interest rates, the economy is going to crash, so then people stop spending, and then that reduces inflation. So I think that's what they're hoping is going to happen, but I don't think it will. The hedge fund community dumped tech stocks in the 4 sessions between December 30th and Tuesday as interest rates spiked. The 4-session tech unloading marked the biggest sale in dollar terms in more than 10 years. Reaching a record since Goldman Sachs prime brokerage started tracking the data. So just to re-emphasize, this is the biggest sell-off since Goldman Sachs record data began. And the reason tech stocks are being crushed and why this may flow into the S&P 500 is because borrowing costs going up have a hindrance on growth companies because they rely on cheap funding to grow. But once interest rates start going up, those funding costs go up and it makes it harder for these companies to grow. And it also makes their future cash flows less valuable. So with valuation so high and looking like profit margins are going to fall, the market is now pricing this in. Goldman noted that hedge fund selling of tech stocks is driven almost entirely by long sales, in contrast to mainly short sales seen in the last 2 months of 2021. The selling was driven by software and semiconductor stocks, the Wall Street firm said. Now also CNBC did a survey to see what was investors' biggest fear and what they think is the biggest risk for markets right now. And it was this everyone, investors fear inflation the most in 2022 and see lower stock market returns, CNBC survey shows. And we can see here, besides inflation, the second biggest risk was the Fed raising rates at the wrong time. So we got the majority of stocks in bear markets or down over 50% in the Nasdaq now. We've got hedge funds selling. Now we've got the Federal Reserve with the triple threat of raising interest rates, no longer buying bonds, and also going to start selling off their balance sheet worth nearly $9 trillion. Now, the Federal Reserve has said they'll lift interest rates 3 times in 2021, but the question I don't think anyone is asking is, what if it doesn't work? What if inflation doesn't go down? What if we have a repeat of the 1970s and 1980s when they have to jack interest rates up to 15 to 20%? Now, I don't think anybody wants to think of that scenario because that would be absolutely catastrophic. We would see the biggest wave of defaults we've ever seen. We will see the biggest wave of bankruptcies. People will default on all their loans. We would see real estate absolutely collapse by over 70% and the stock market collapse over 70%. So I don't think anybody wants to think about that scenario. But now it won't take interest rates going up to 15% for there to cause a big crash. Why? Because there's so much more debt and because people have been borrowing at 0% interest rates for such a long time. So if inflation doesn't go away and they have to lift interest rates just by 3 or 4%, well, this would be catastrophic for the market. And we would see a huge sell-off in the stock market and in the housing market. Now, I'm not saying this is what's going to happen. I'm not predicting this at all. I'm saying this is just a scenario that I don't think anyone is talking about that may be a slight possibility. So everyone, I think we're about to see a lot of volatility in the markets. There may be a slight rebound in the markets today of, again, people thinking it's a great time to buy the dip. Things just don't go down in a straight line. But what I'm going to be looking out for is the latest CPI inflation data that should be released on January 16th. And I'll keep you updated on that. And it's going to be very interesting to see what the Federal Reserve says during its next meeting this month. And I'm sure the media are going to bombard him with questions and see if he folds under the pressure. So everyone, that was a quick update with what's going on in the markets, with what's going on with hedge funds. I thought this was very interesting, but what do you think about this? Let me know. Now, for all my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll put up some other videos here. I'll see you there.